And we are back at the TechCrunch Disrupt conference in San Francisco. Joining us now, Jeff Weiner. He's the CEO of professional networking site LinkedIn, and we're lucky to have him because Jeff just announced a new product that LinkedIn has that links folks to Twitter. Jeff, can you explain to us how it works? It's called Signal, we should say. Tell us exactly how it works.
Yeah, so Signal is really short for our ability to now extract or separate the signal from the stream of content that flows through LinkedIn. You know, when people update status messages on LinkedIn to let their professional connections know what they're up to, what they're working on, the kinds of news headlines they're reading about, they can now extract the most relevant signal from those updates. And exactly as you mentioned, that will also include tweets for those people that have integrated their LinkedIn and their Twitter accounts.
Do you think that you ever get to a place for internet users where there's a certain amount of fatigue in terms of all the different sources of information? Is the objective eventually to integrate as much as you can so people don't have to go to too many different sources?
Well, you know, it's a great point. I think there is the risk of information overload, and that's exactly what a product like Signal is designed to help with, to extract the most valuable and relevant content and information that you need as a professional to get your day-to-day job done.
Now, I'm curious too, obviously this goes to the same point in terms of competition. Facebook has been seen as more of a social connection instead of a work connection, but increasingly people are connecting with colleagues that way as well. How do you differentiate LinkedIn on that front?
Yeah, I think there's a lot to be said for the different context between your professional life and your personal life. And to your point, while there may be some overlap, while you may be good friends with some of your colleagues, when we get out there and we're talking to customers and we're talking to our members, we hear the same message repeatedly, which is they want to keep their professional lives and their personal lives separate. So there's something to be said about 100% focus on a professional context. And then, of course, making sure we're providing the most valuable and relevant insights we can within that context.
Jeff, I have to ask you the question that everybody asks, the token IPO question. I know you talked about it a little bit today, and you talked to us that going public was a tactic that might enable you to achieve long-term objectives. Give us a little more detail on that. What, I mean, you know, if and when it happens, what do you use the money for?
Well, I think the currency and the capital could certainly help us in terms of the rate of growth, the path of growth, and things like acquisitions, continuing to invest in our company. You know, one of the reasons I oftentimes say that's one option available to us going forward is the company has been operating cash flow positive now for the last couple of years and has been able to leverage that cash flow to invest in our day-to-day operations. So, for example, we ended last year at about 500 employees. We're going to be growing somewhere north of 900 employees this year, and all of that was funded through that operating cash flow. Similarly, we've done 2 acquisitions in the last 6 weeks, both for technology and talent. And so regardless of whether or not we go public, we are able to leverage the capital we have access to invest back in the business.
Well, I guess then the question is, what do you need an IPO for?
You know, there's a lot of different reasons people pursue the options that they do. I think classically speaking, IPOs can help companies with liquidity, with gaining greater access to capital, currency in terms of their stock, a branding or marketing event, credibility with larger customers. I think those are some of the traditional reasons that you've seen people go public. What's interesting in this day and age, though, is that you've got very deep-pocketed private equity firms who are now doing deals that may offset the need for companies to go public. And of course, we raised about $76 million in a Series D in August of 2008, and all of that money is still in the bank.
Okay, Jeff, unfortunately, we're out of time. Jeff Weiner, CEO of LinkedIn, thanks a lot for joining us.